Bill, who owns a small business providing Emmy-winning voiceover services around the country, asks, is it better to have my company own the vehicle I drive for business, or should I own it personally? It'll be a mixed-use vehicle, meaning I'll use it for both personal and business driving. What is my best option? The answer is coming right up.
Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with certified public accountant Tina Moe.
Bill, the answer to that question rests heavily on the amount of your anticipated business use. If the business owns the vehicle, but you also drive it for personal use, you will be required to pay income tax on your personal use of the car. Also, just so you know, in this scenario, Bill's company will be limited to the amount that can be depreciated if his business use is 50% or less, as there are special depreciation incentives if the business use is over 50%. Also, if his business use is over 50% in initial years but drops below 50% in subsequent years, he could be subject to depreciation recapture. In plain English, that means that he'll get hit with an additional tax if he can't substantiate more than 50% business use in later years. This can be a deterrent for some people who aren't sure about the amount of business use they'll actually have, or who just want a more simplified method of deducting the business use of a car. The IRS has two different options to choose from when it comes to deducting the business use of a car. There's the standard mileage method and the actual expense method. And there are pros and cons to each method, and both methods are available to businesses and individuals. There are some exceptions to that, as is true with most tax law, but today the assumption we're making is that both options are available to the taxpayer asking the question. The 2014 standard mileage rate is 56 cents per mile, and that can add up really fast. And if you own the vehicle personally, you aren't subject to tax on the personal use of the vehicle. For a lot of my clients who decide to own their car personally and who use the standard mileage rate, it turns out to be a simpler and sometimes more beneficial method of deducting your business miles. The business can reimburse Bill for his business mileage at 56 cents per mile, and it's deduction for the business, but since it's a reimbursement of an expense, it's not taxable to income to Bill. This is a pretty simple and easy method of deducting your business miles without some of the complications that come with a company-owned car. There isn't a standard yes or no, black or white answer to this question, unfortunately, so you'll want to look at your business use of the car and talk to your tax professional about the method that is right for you. Keep in mind that the IRS requires you to keep track of and report your business miles regardless of the method you choose. And one last thought, be sure to check with your car insurance company to be certain that you're covered for business use of a personally owned car or personal use of a company-owned car. For more information, visit my website at www.actservices-inc.com. And if you have a question that you would like an answer to, feel free to submit it to my website.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.